Hello, this is Mark from TradeInform.com and welcome to this video on a profitable Ichimoku Forex trading strategy. I've got on the screen at the moment the Euro US dollar on the daily time frame, and I'm showing 4 of the Ichimoku lines. I've left off the lagging lines for greater clarity and because I'm not using it in this analysis. What I've picked here is a nice upward trend in the Euro US dollar, and this is what people trading the Ichimoku cloud and system are looking for. Ichimoku is designed to keep traders on the right side of the dominant trend and to hold on to this trend for as long as possible until it's clear that it's changed direction. So what I'm going to do in this analysis, what I wanted to do is to find out how well Ichimoku follows the trend and whether it can be traded on a simple automated basis. And to do this, I've chosen 3 entry and exit strategies using the Ichimoku lines, and I'm going to see how well they perform just on a simple automated basis. Now, the first of these strategies is shown here. I've got the 3 entry strategies highlighted here on the left. The price here is closing above the blue line, the baseline. Now, this is the signal for a long trade. A short trade would be when price closes below this blue line. Trading strategy number 2 is here, and this is when the red line, the conversion line, crosses, in this case, above the blue line again, the baseline, and if it crossed below, that would be the signal to exit the long trade and enter a short trade. Now, the third of these strategies uses the most distinctive feature about the Ichimoku, which is the cloud here. And you can see here it is actually when the price has closed above the Senku B line, which is the slower of the cloud lines. So this is really showing that the trend has changed direction and we can now trade in a new direction. Now, the first 2 of these strategies close here, and we can see that the price has for the first time closed below the blue line, and on the same day the red line has also closed below, and so we would enter short at this time and close our long trade. But we actually have to scroll on a little bit further to see here, which is when the price finally closes below the cloud. So we're actually holding on to this trade for 6 or 7 months to really get the market to prove to us that the trend has changed direction. I wanted to try these 3 different ways of using the Ichimoku. The first 2 are good ways of getting in fairly early in the trend and ideally taking as much profit as possible for the relatively strong moves, and then the cloud using as a backstop really when we have the really strong but slower moving trades to keep on board the trend for as long as we possibly can, until it's proven at this point that it has changed direction. So the analysis I'm going to carry out using Microsoft Excel, and what I'd firstly like to say is that I do have a new ebook available. This is available in the Amazon Kindle store, and along with Ichimoku I have included the impulse indicator, value charts, money flow index, KST, balance of power. If you like trading chart patterns, I have Harami and tweezer bottom and double top patterns in there. I show how all of these indicators and patterns can be programmed into Excel. I'll give some tips and examples of how to use the indicators, and there is also a free spreadsheet that comes with the book, and you can start off straight away carrying out your own analyses using these indicators. So just to recap, the Forex, the trading strategy that I'm looking at today, the first of these, crossover of the conversion line above or below the baseline. This is a long short strategy, so we'll immediately, if we have a crossover, we will reverse the direction of our position. Crossover of the baseline. This is a closing price above or below the baseline. And also crossover of the closing price above or below the Senku B line. This is the spreadsheet that I'm using to carry out the analyses. I'm considering them as three separate trading strategies, and you can see here that I've got all the calculations for the Ichimoku in here, which came straight from the ebook, which can just be copied across. And the spreadsheet that I'm using here is also available. There is a link on the screen if you would like more information about this. So I'm using three of these spreadsheets to carry out the analysis for each of the trading strategies, and I've aggregated the results in a further spreadsheet here. So what I'm showing here is strategy 1, 2 and 3, profit and loss, and our capital. So I have the metrics here to show how the trading strategy has performed over time, and this is quite a long time period. I started here in 1992 and the data goes up to the middle of December 2014. I just want to have a quick look at the capital balance here. We can see that it is actually very surprisingly constant all the way from 1992 to 2003. So it is showing not extreme profits or extreme losses, but a nice steady gain during that time period. Things slowed down and the capital was a lot flatter up until really, we can see here, the start of the financial crisis, 2007 into 2008, 9 and 10. The strategy performed very well indeed, and the capital increased significantly over this time period. And for those of you who have traded since here, which is 2010, 11, the Eurozone situation calmed down. Mario Draghi promised to do whatever it takes. The central banks really took over the currency markets for a long time here. You can see right at the end here we've had a big fall in the value of the euro versus the US dollar, and remains to be seen obviously in 2015 and beyond whether or not this is going to signal a return to previous levels of volatility. But in any case, we're showing here that the strategy, or the three strategies, have all been profitable and they've all performed quite consistently well over a long period of time. My conclusions here that these are three very simple strategies, very simple trading rules. It would take no time at all for anybody to use these trading rules in their daily lives. It would only have to be once a day to check the charts. They can of course be improved. I say this in all of my videos. This is really a just for most people, just to start identifying the major trend. But I would say that from this video that I think I've shown fairly comfortably to my own satisfaction that Ichimoku is a good way of identifying the trends, and it can be simply and profitably traded on the Euro-US dollar pair on the daily time frame. If you would like more information about backtesting using Excel, market analysis, and generally about the financial markets, please go to www.tradinformed.com.